So some of the key aspects of what's required to be a successful ESOP are one, a really developed and mature and profitable company. All ESOP transactions are financed with debt, meaning that they're financed either through bank debt, seller debt, sometimes maybe junior debt or mezzanine debt, but it's all somebody borrowing, company borrowing money, relying on the future cash flows to pay off that debt. And so we need to have a stable business that has certain levels of profitability to be able to afford those debt payments. Well, again, whether it's to the shareholders or back to a bank or to a financial institution. Typically, that profit level is really aligned with our profile. So somewhere in the $3 to $5 million of earnings and above is really what's needed to be an ESOP transaction and have it be a quality transaction. In addition to that, we need to have a company that has a workforce of typically 25 to 30 people. In ESOPs, there's a payroll aspect or a level of compensation, total compensation for the organization in order to be compliant with ESOP regulations, right? Department of Labor and the Internal Revenue Code. And so we need to have a big enough employee base to allow for share allocations to happen, to allow for the ESOP contributions to take place, and to maximize the benefit of the employee stock ownership plan itself. One of the things that we do is we also analyze all of those requirements first and foremost. So rather than having a client get into the engagement, begin negotiations, get enamored with the deal or the transaction, we want to make sure that it's going to be a compliant ESOP before we've engaged anybody else, right? Before we've gone through the process of working with a trustee, evaluation firm, sourcing financing. That doesn't work if we're going to fail, compliance testing, right? And the rules and regulations that govern ESOPs. And so we make sure that we cover all of that in the front stage through our feasibility process so that we don't go too far down the path and then put the client in a worse off position. We've seen that actually several times. We've had some clients recently that have ESOPs that they've, enacted on or went through an ESOP transaction. We were not a part of that transaction, but we've had to come in and help them to rectify the situation. Because if you don't do all the great groundwork and build the foundation of a successful ESOP up front, you're not going to have a successful outcome down the road.